3, 2, 1, 0, and liftoff. Liftoff. Americans return to space as Discovery clears the tower.
Welcome back to TTMTrades. All right, today we're gonna go over a couple of the stocks I've been looking at for today. All the ones from here up, we already did the video on right here. If you have not seen that video yet, then go back, watch that video, and then come watch this video, because today we're on May 31st, 2018. All right, so today when we're talking about what we posted, well, what I posted in chat, we talked about ticker IPAS, XOP, PLX, and that was about it for the day. All right, so we're just gonna kind of go through those three, and then in the comments, man, leave below what kind of stocks you want to talk about and or ETFs of what you're interested in, and I'll take a look at them, and you know, if they meet the certain criteria and things that I'm looking for, I add them to my video tomorrow, so that way you could check back and see if the stock that you was looking at is in the video. Okay, but yeah, StockTwits, we up to 2,600 followers, 2.6K, man. I deeply appreciate every single one of you. Let's continue making money together, and let's just jump right into it, man. So ticker IPAS. All right, so looking at ticker IPAS, like we said, it's on this downtrend, making higher, well, lower highs and lower lows. You got this high, but a low, lower high, low, lower high, low, and now you're getting a breakout to create a higher high. Now, if you don't know my Bollinger Band strategy, what I look for is for the bulls to come in and show some strength, to show that they are coming in and buying the shares, and they're shaking out the weak hands as far as the bears, and they're accumulating all their shares that they're selling, and the demand is higher than the supply, right? So in order for me to see that, normally when you're on this downtrend like this, I look for the bulls to push the price up and test the middle Bollinger Band, and then as the price begins to pull back, I look for it to hold above that 1 standard deviation Bollinger Band and then push to make a higher high, right? So on this downtrend, you can see here, price action pushed up into that middle Bollinger Band, just right above it, and then as the price action began to pull back, it did not hold above that 1 standard deviation Bollinger Band, which showed weakness in the bulls, and then as it began to pull back in that 25 to 26 cents area, shares are immediately accumulated. The bulls showed strength, and then the stock began holding above its 10-period moving average, and then trending above the top band, the 1 standard deviation. So we alerted this one right back around 38 cents. Around 38 cents, and it has pushed up to right around 44. So even if you got in around 38, 44, that's a good profit to lock in. But if you want to try to hold for the long term, one thing I would do is always watch for the pullback. So anytime the bulls show strength, then normally everyone who bought down in this area will become, I'm not going to say bearish, but they will become sellers, begin locking in profits. You may have people who try to jump on the stock to try to short it because they think it may continue to downtrend. The whole nine, right? It becomes an area of uncertainty. So normally what happens is you get a pullback. Now, normally on that pullback, what we want to see is that pullback holds above that 1 standard deviation Bollinger Band right at 31 cents, right? And then the shares begin to get accumulated again. What that shows is the strength of the bulls coming in, wanting to continue to push the stock up, and to continue into a further uptrend. All right, so that's one thing that I'm waiting on. Yes, we pushed and we made a higher high right at 44.3. And yes, it's right in that top Bollinger Band, and the volume is holding steady. Yes, all of these are great things. But if you were on the sidelines looking to make an entry, I would not jump in right here in this particular price range of 40 to 44 cents, right? I would either wait on two things. I would wait on a very strong breakout on very high volume to show that the bulls are taking over in full effect, and or to play it safe, I would wait for the pullback to this 35 cent area and or to this 31 cent area. Now if we begin to pull back and it pulls all the way back to its 2 standard deviation down here right around 26 cents, and it pushes into that lower Bollinger Band on high volume again, then that shows weakness and the bulls unable to hold this stock up. Okay, so right now, if you are in this stock, I would be careful in this general area. You could possibly get a continued push going into tomorrow, seeing that there's plenty more room on the RSI, but I highly believe that there may be a pullback here temporarily to shake out the weak hands and then allow those who are on the sidelines to get in and continue this run up. So we'll definitely keep an eye on ticker IPAS. Now, one thing to note, that when it starts pushing outside of the bands, right, I really have no profit target areas to play, because now the bands are, the price action is pushing outside of the bands. So then I switch over to the weekly charts. So looking at the weekly charts, the overhead resistance is right here at 46 cents, right where the 30-period moving average is at. So I would look to lock in profit right around 46 cents. Wait to see if the stock pulls back again, as we talked about, to those specific target areas, and then re-enter and try to ride it back up to that 45 cent for a possible break on a swing trade. All right, but that's ticker IPAS. Next we talk about XOP. All right, now ticker XOP. Now ticker XOP to me has shown some weakness, right? And the reason why I said it's shown some weakness is because of this gap down on the price action on a pretty high volume, and then the bulls trying to hurry up and make a strong run to push this price action back up to its peak at right at 44, where the top Bollinger Band is at, and then being unable to, right? So just like on a downtrend with the test of the middle Bollinger Band and then a pullback, this is what we're seeing on a uptrend, but reverse, right? Very strong uptrend, trending between the top two Bollinger Bands. It pushes into that high of 44.75, and then on the pullback, right, it tests that middle Bollinger Band, right? And then as the price action begins to push back up, for the bullishness, we want to see the price action break above that top 1 standard deviation Bollinger Band and push back into its highs, where the 2 standard is at right at 44.17. So today what I said is, I said watch XOP to see if it has trouble holding above 42.50. If unable, would start watching if unable, would start watching drip for entries, which is the inverse of this ETF XOP. So 42.50 is right at where the 1 standard deviation Bollinger Band is at, along with its 10-period moving average. So as you can see, it pushed up into that 42.50 to try to make a break above it, and then immediately you had this sell-off, and then it closed at 42.25. So does that mean ticker XOP is going to go on this crazy downtrend? No, it does not. Does it mean it shows weakness in the buyers to continue to try to hold this price action up and or this tempo or momentum that the price was moving at? Yes, it does. It definitely shows weakness. Even looking at the volume is pretty below average. All right, so what I would look at going into tomorrow is, I would look for the confirmation on this, right? Tomorrow I would look for a retest of that 42.50 area again. And if the price action is having trouble breaking above it, then I would start looking at ticker DRIP, which is its inverse for entries. All right, so since we see the momentum as far as XOP, the ETF, on the uptrend, then now let's look at its inverse, DRIP, DRIP. So as you can see, ticker DRIP, DRIP, had this bullish breakout, right? Everyone saw this in the past 2-3 days. And which we always said on a downtrend, remember, if we want to see the bulls rally and show strength, we want to see them push up into that middle Bollinger Band, right, where profit taking then happens. As you can see, profit taking started happening, and then as the price action begins to pull back, we want to see the bulls hold the price action above that 1 standard deviation Bollinger Band, which is what you see here. The price action, yes, it dipped below that 1 standard deviation Bollinger Band, which is at 653, but then immediately the shares were bought and accumulated and closed right at that 1 standard deviation Bollinger Band, which is 653. Now if the price action would have continued to run down all the way back down to this bottom Bollinger Band at 557 and started pushing into it, then that lets me know that the downtrend is going to continue. but the bulls were able to hold it above as well, right at his 1 standard deviation Bollinger Band. So again, just like with ticker ETF XOP, we want to see the confirmation tomorrow as far as the bullishness in the bulls. If the bulls can't push ticker XOP higher and close it above that 4250 on high volume, then we know as far as ticker DRIP, the bulls and ticker DRIP, which is the inverse, they're shifting into this inverse, and now they're buying the shares and they're holding it above 653 is 1 standard deviation Bollinger Band, which shows the strength of the bulls coming in and accumulating these shares. Now, will you get a crazy run up all the way back up to these highs? No, you won't, right? You play the bands for profit. As you see here, ran up into that middle Bollinger Band, profit was taken, it pulled back, bulls are holding it above that 1 standard deviation Bollinger Band. Now, looking on a weekly basis where we should take profit, then right here, the 1 standard deviation Bollinger Band on a weekly, on the bigger time frame, on a bigger scale, is right at $8.86. Right, so if you begin getting a push up, then you want to, when you push into that 1 standard deviation right at 886, then you want to start looking to lock in profits, right? And then just go from there. Wait on the pullbacks, catch the pullback, and ride it back up. But that 886 will correlate to this general area right here in that top Bollinger Band. Now, what happens if the price action does hold above 653 and it begins to push up into that 886 area, right where your 1 and 2 standard deviation Bollinger Bands is at? For one, that's very bullish. For two, you should expect a pullback because they're going to be profit taking right in that general area. And then as it pulls back, you want to see it now hold above its middle Bollinger Band, which shows more strength in the bulls to continue to ride this thing back up. Okay, but that's what we're looking at now. Even with ticker XOP, as you can see here, our percent band, which literally is a momentum indicator of the Bollinger Bands exactly. As you can see here, when it breaks above its 50 period moving average, that is a very, very, very bullish sign in momentum, right? So it broke above its 50 period moving average right along that green line, and then it began trending upwards, right? Profit taking, started moving sideways, found support right on that 50 period moving average, and then began trending upwards to represent this next uptrend. Now, one thing to pay attention to is you got this strong push in this trend, and then again when you get another push, it's very weak. You see that lower low? I mean that higher low, that lower high, but whatever you want to call it, right? Now the price action has broken below both bands, and as it began to push back up, right, it kind of looked like it's getting rejected. Tomorrow, like we say, you may see another push. If it pushes into that 10 period moving average and then gets rejected, then we know the momentum in XOP is going all together. Now, one thing to keep in mind is the volume. The volume is holding steady when it peaked out here at the top, and then on this last bull run up right here, pretty high volume, and then on this last attempt to create a higher high, it was on some low volume, right? So that looks pretty fake. So one thing is, when it comes to volume, I keep an eye on my on-balance volume, right? As you can see here, there was constant accumulation. This is why your unbalanced volume is constantly making higher highs and higher lows, because the stock is constantly getting accumulated. The buying pressure is way stronger than the selling pressure. And then the unbalanced volume begins to trend sideways, holding above its 10 period moving average, and that shows a consolidation period, right? Even when you look down, here's your consolidation period right here, and then you get the breakout with a lot of buying power. This is why your unbalanced volume is trending so high, making higher highs and higher lows right here. And then you get this double top out, and then all together the unbalanced volume just sells off. Hits its 30 period moving average, which is also this little candlestick that formed right here, and then you get a weak bull run, in my opinion, which pushes up into that 4250 area we was watching on not so strong a volume. And then as you can see here, your unbalanced volume pushes up, and it looks like it's not a lot of accumulation, and maybe a sell-off is about to happen here pretty soon. But you are definitely below that 10 period moving average, which shows a sign of weakness, with your unbalanced volume during this entire uptrend is held above it. So, but definitely keep an eye on that also. But definitely that 4250 is the definite area to watch. Now moving on, ticker PLX. All right, so ticker PLX, as you can see here, had the downtrend. Bulls showed some strength. They pushed up and tested that middle Bollinger Band, and then as you got the pullback, instead of it pulling back into that 2 standard deviation, it held above that 1 standard deviation, which shows strength among the bulls, and then you started getting this uptrend on the price action. Now it has pushed up pretty high, so if you're on the sidelines waiting to jump in, I would pretty much wait for a pullback, which is what I said in our Discord chat. PLX higher high on increased volume, overhead resistance at 49.60. Wait for the 46 cents pullback. All right, you're pushing into a resistance area. As you can see here, when the price action ran up to 51, it closed right at 49, and then again rejected at 49, rejected at 48, and then again 48, and now you're pushing up into that prior resistance. Now, did you push above it? Yes, but you closed right at where the resistance is at. So there's a strong possibility that this may pull back. So if you're on the sidelines waiting, I would wait to see if this either breaks out higher tomorrow on stronger volume, because as you can see here, the volume today was above average. It was 1.61 million shares, with the average being 479,000 shares. So definitely a lot of accumulation here. So I would wait for either another strong breakout tomorrow on higher volume, or I would wait for a pullback into that 45 to 46 area, right where the 10-period moving average is matching up with the 1 standard deviation Bollinger Band, signaling a possible uptrend. Now, why do I say 49 and 60 is possible areas of resistance? Now, keep in mind, each shorter time frame adds up into the bigger time frame. So for myself, the daily chart is my medium time frame, right? My shorter time frame is the 2-hour charts, and my more long-term time frame is the weekly chart. I don't look at monthly charts because I do not plan on holding stocks from month to month, right? To investors and other people that want to hold stocks from month to month, that may be their longer time frame, okay? For day traders who trade on 5-minute charts and 15-minute charts, to them, their short-term time frame may be 5 minutes. Their medium-term time frame may be an hour chart, and their long-term time frame may be the day chart, right? Because they're playing those intraday swings. Myself, I'm not a day trader, I'm a swing trader. So I go from 2-hour, which builds up into what my day charts is telling me, and then my day charts build up into what my weekly charts is telling me on the overall big picture. So now with that being said, why do I think 49 to 60 is strong resistance? Well, if we go out to the weekly, which is where I normally trade on a week-to-week time frame, you can see that bearish downtrend. And now, just like we saw on the daily, on the medium-term time frame for myself, as the bulls pushed up into that middle Bollinger Band, and then the price action pulled back and held above its 1 standard deviation, which showed strength of the bulls, then this is what you're seeing on a bigger picture time frame on a week-to-week basis with ticker PLX. You have the 1 standard deviation right here coming down right at 49 cents, right? So that's immediate resistance in itself. And then you have 60 cents, which is sitting right at that middle Bollinger Band as the next line of resistance. So just like we're seeing on a medium term basis with the day charts, on the weekly charts, we're seeing the same thing. We're seeing the bullishness of the bulls to push up to test what? That middle Bollinger Band, like we said, right, to show some strength. Then you're going to probably get an immediate sell-off, and then what you want to see on the pullback on a week-to-week basis is that it pulls back into the 1 standard deviation right now, sitting at 49 to possibly 50 as the big band begins to curl in the upward motion due to the push-up. And then if it holds above it on a weekly time frame, then we jump back into it on a daily time frame and ride it back up to retest that middle Bollinger Band, and now the next band sitting right around 70. All right, but looking at it on a week-to-week basis, if you look here, where's 60? Right here. If you look, 60 was an old line of support right here. Support, support, support. All right, and then finally the stock failed altogether and went on this bearish downtrend. So now when you begin to push back up, what's the golden rule I always preach? Old support, if broken through, will become new resistance. If old resistance, which is broken through, when the stock pulls back, should become new support. That's the golden rule. That's one of the basic rules every trader should know, right? And then also keep in mind, as a trader, right, you have to think logically and just psychologically, right? If you entered as a trader anywhere from November all the way up to March in this price range from 60 to 74 cents, and then all of a sudden this stock drop down on you, you're at a major loss, right? You're literally holding the bag, a big L. You have a big hole in your account right now. If the stock begins to run up back into that line of support at 60 cents, and you were a trader that got in this stock from November to March before it dropped down, what are you going to do? You are going to offload your shares to now break even to recover the loss you initially had from this stock dropping. Now, when supply outweighs demand, what happens to a stock? A stock will pull back. So this is what we're going to see. If the stock pushes into that 60 cents, you're going to see all the traders who entered in this area and who got trapped due to this downtrend, they're going to offload their shares onto the buyers, right? And that's going to create an oversupply of shares, which in turn will cause the stock to pull back. And when the stock pulls back, the bulls and the bears will find an area of equilibrium. The stock will hold in that area, and then it'll start a base building process and then run back up to retest those areas. But that's where we're at. All right, just a quick explanation, but definitely 49 to 60 cents are the areas of overhead resistance. Again, I would try to wait for that 46 cents pullback and or breakout on high volume to break above 49 cents. If we close the week out tomorrow on Friday above 49 cents on high volume, then I would look at next week to push into that 60 cents. All right. But again, TTMTrades, man, if y'all learned something, please hit that subscribe button. Leave a comment below on what stocks you want me to talk about going into tomorrow. And yeah, man, like always, let's continue making money together. And until next time, I'm out.
Houston, Tranquility Base here. The Eagle has landed.